Nadir, thanks very much for your time. A good move, I see analysts say, by Naspers. I mean, the story has been going on for a while. Tell us why this is particularly good news for South African pension funds.
Yeah, so I think there's a couple of reasons, and I think the primary reason for this is that Naspers, the rump of Naspers' business. So basically, Naspers is invested in a Chinese internet company called Tencent. Yeah, I'm sure a lot of your viewers are familiar with that. The fifth largest company in the world at one point, larger than Facebook at one point last year. Basically, a technology company that operates out of China. So Naspers owns a third of, or did own a third of, they've now downgraded that to about a 31% stake in Tencent out of China. And the biggest issue with Naspers is that 31% stake in Tencent actually is worth more than the value of the entire company. Now, obviously, Naspers doesn't only consist of the stake in Tencent, consists of a whole lot of other businesses. Up until very recently, DStv or MultiChoice was within the Naspers stable. So we're talking about MultiChoice, Media24, Takealot, OLX, Mail.ru, Delivery Hero, Swiggy, iFood, a lot of these very valuable assets trading at a negative valuation within Naspers because the market was saying its stake in Tencent is worth more than all these businesses plus the value of the Tencent stake. So a negative attribution to all the assets outside of Tencent. Now, what management is explicitly trying to do is unlock that discount to the value in Tencent, and they're doing this by separating the businesses. So the separation of MultiChoice into a standalone offering was the first step in doing this, and we saw that MultiChoice now separately listed on the JSE and has actually done quite well since being spun out of the Naspers group. And now this is the second stage, where listing all the internet assets outside of South Africa into a separate listing. What management says this will do is that it will enable a whole lot of international capital which is interested in Naspers technology assets, some of the most attractive technology assets in the world, or the most rapidly growing technology assets in the world in a number of emerging markets. The market will then be able to realize the value of these assets and be able to unlock the value, the discount that Naspers share price currently trades at. So that's the first point. The second point is that the JSE, there's currently a major structural issue on the JSE where Naspers is almost too big to be on the JSE. As a result of that, we see Naspers making up 20, 22, 23% of investors' portfolios. There's obviously massive single stock risk in that. So if Naspers doesn't do
when something happens to Naspers, then it drags a lot of people with it.
Exactly right. Now, by separating this business outside of its South African internet assets, it reduces basically the market cap weighting of the South African JSE listed business, and it brings down that concentration risk, and as a result of that, you're not that exposed to the single stock risk.
But what is the benefit for those pension funds that have invested in those assets?
Okay, so the benefit is that hopefully over time now, because these are all standalone businesses, so MultiChoice is standalone business, the internet assets outside of South Africa is standalone business, hopefully what the market's now going to realize is that the rump assets of Naspers shouldn't be attributed a negative valuation. There's a lot of assets in there which are highly profitable, there's a lot of assets in there which are growing rapidly and yes, require a certain amount of investment within those assets, and depending on the 10-cent dividend to fund that investment in those assets. But in time, as that investment starts to take hold, those assets are going to reach profitability, and these are attractive assets, so they don't deserve a negative valuation. So that's the first point, is going to unlock that value. The second point is that, again, as I mentioned, you're not going to have this over-concentration in a single share in Naspers, because naturally it's weighting on the JSE and in the all-share index, in the Swix index, which is a lot of the equity benchmarks which local equity managers use. The weighting to Naspers is going to be reduced, and as a result of that, you're not going to have this massive concentration in the single.
Very, very quickly, MultiChoice, I know it's done well so far, but does it have a future, given your Netflixes and so on? But I'm asking this also because, remember, there's a whole group of black investors, that got those black economic empowerment shares. Are they going to realize value?
Yeah, look, I mean, so there's a big case to be made for MultiChoice. People make a kind of the sunset industry argument that over-the-top content providers are what's going to dominate. The bottom line is that 14% of South Africa's population has access to high-speed, reliable, uncapped internet, and you require that in order to have a Netflix and the like really take taking hold. The other point is that the cost of having a Netflix subscription, you've got to have the uncapped internet. So by and large, the cost of having a premium DSTV subscription or a Netflix subscription with an uncapped internet connection is around about the same. That's the first point. The second point is that MultiChoice is actually losing a phenomenal amount of money outside of South Africa on the African continent. If they can get those operations to break even, that's potentially another 13 to 14 Rand upside in the share price just by getting Africa to break even. That's not even getting them to profitability. So the bottom line is that there's a lot of low-lying fruit that they can access. They have a lot of local content, which is what people watch, and I think as a result of that, people are really overestimating the sunset industry in terms of satellite TV and potentially some further upside.
Well, let's hope that indeed is the case. Unfortunately, we have run out of time. Thank you for coming through.